Hey everybody, John here, your remote CPA. Next up on our empowerment video series, I want to talk about income. So we're going to cover topics like when to record the income, how to use some of the invoice features in QuickBooks, and how to avoid double counting income, and how to bill for one-off things like change orders. So I've got our sample QuickBooks file up here, Craig's Design and Landscaping Services. Obviously, I would never use real client data, so this is the standard QuickBooks Online Accountant sample file for demonstration. Most of you hopefully are using BuilderTrend, and that's really the best place to start your invoicing and recording all of your income. So I would recommend you break down all of your jobs into a specific draw schedule. Usually there's anywhere between 3 and 6 draw payments that the homeowner has to pay you throughout the project. And every time you are set to get paid, I would recommend creating an invoice in BuilderTrend. And if you don't know how to do that, I would recommend seeking out some of the BuilderTrend training or jumping on a call with us directly so that we can show you inside BuilderTrend. Unfortunately, we don't have a sample BuilderTrend account. Maybe if somebody's feeling generous someday, they can donate one for us, but BuilderTrend has gotten pricey. So if you start recording all of your income in BuilderTrend, it will feed automatically into QuickBooks. Every time you create an invoice for a homeowner in BuilderTrend, it's going to create an invoice here in QuickBooks. So if you go into sales and then you go to customers, you can search for that specific customer, or you can see the open balance over here for the amount that they owe you. And in this sample file, they have pretty low dollar amounts, but we can click into one of them and we can see that this total balance is spread across 2 different invoices, and this customer has made a partial payment. So you can get all of the same functionality in BuilderTrend by generating the invoice there. You can generate an invoice for a change order also, so that's really helpful. If push comes to shove, you can come in here and click new, and you can generate an invoice for a certain customer, but it's going to get all kinds of wonky when it syncs to BuilderTrend. The other thing you can do, you can receive a payment. So I would also recommend you receiving a payment in BuilderTrend, even if your draw payment is billable to a bank. So if your homeowner has a mortgage and the bank paid you, I would receive the payment in BuilderTrend because it's going to keep everything up to date there. And then it's going to push to QuickBooks. If you have someone who just writes you a check, say for example, you have an unrelated business that's not in BuilderTrend, you can come in here and record a sales receipt when you get that check, when you get it deposited into the bank. So it seems pretty easy peasy, right? Just keep everything in BuilderTrend. Well, unfortunately, there is another step that a lot of people get hung up on, and that is undeposited funds. And this, I've done blog posts, I've done other videos, I have talked about undeposited funds until I'm blue in the face, but it's over here in bank deposits. We still can't talk about undeposited funds too much because it is such a source of mistakes and errors. And when things go wrong in undeposited funds, they are wrong in the entire QuickBooks file. And what happens is a lot of people will record that, it's especially common if you use the WePay online payment support from BuilderTrend. So say you're doing a remodel and the homeowner is paying you directly, there is no bank involved, and they pay you online through BuilderTrend. BuilderTrend is going to process that payment through WePay, and they're going to take a fee. I think a lot of times it's like $15. So BuilderTrend will usually mark that invoice as paid, which is great, and then they're going to deposit it to undeposited funds. So in our sample invoice here, if I were to hit receive payment, it's set to default deposit to undeposited funds. You can choose the payment method. Usually I recommend adding a new payment method for BuilderTrend specifically. But sometimes it will default to deposit right into your checking account. But that's wrong, 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 because it's going to deposit that full $70 into your checking account, and it's not going to take account for that $15 fee that gets pulled out of there. So usually, depending on how BuilderTrend is set up, it's smart enough to deposit it to undeposited funds and record the fee. So if I hit save and close on this received payment and I go into, so then what it normally does, it creates a journal entry and it will book it to fees. It would be an expense, so we can pick commissions and fees. We'll do the $15. We'll say BuilderTrend fee. It usually puts BuilderTrend in the name, but I'm not going to do it because it's going to force me to create a new vendor, and I don't need to do that right now. And then the other side is going to be undeposited funds. And so then if you hit save and close and you go over here to new and you do bank deposit, you're going to have your journal entry for -15, and then you're going to have your Red Rock Diner, and then the net of those is going to be your total amount, and you choose your checking account and the date that it was deposited, and then that will tie very nicely to your bank feed when you only get $55 in the bank. Hopefully as a home builder you're getting paid a lot more, but that's another topic. The other thing is, if BuilderTrend doesn't automatically record your -$15 fee, you can add it down here. So you can put that you received from BuilderTrend. You can use the commissions and fees accounts. For most of our clients, we use a standard chart of account, and we have an account for payment processing fees. And then we use our payment method is BuilderTrend that we just created. And then the tricky part is that you have to put -15. And it's counterintuitive because down here at the bottom it says add funds to this deposit, but what we're really doing is we're recording the fee, which shows as a negative amount. So that's just if BuilderTrend did not post this journal entry. So then the net of the two transactions still comes out to the $55. So what can go wrong? Why is this important? Well, if BuilderTrend only records transactions this far, most people don't even know that undeposited funds exist. So they've got these transactions in here that are just accumulating over time. A lot of times when we get new clients and we start their cleanup and their onboarding, we come into undeposited funds and we have a whole list of transactions that don't belong. So why does that matter? Well, then all of people who do bookkeeping, maybe a part-time employee or something comes in here and look, they see this $55 transaction in the bank feed and they know, hey, that is nope, that is the diner. They paid us. I need to get this recorded, and they book it to sales of product and they hit add. Well, guess what? When things get recorded in undeposited funds, either they usually are entered as income here, and then someone just went into the bank feed and entered more income. So once in a while we come across a home builder who, they run their P&L and, they're like, how does it show that I'm so profitable? I have no money in the bank. Well, the unfortunate reason is because all of their income has been duplicated through undeposited funds. So it's a trick. It's a common mistake. I don't know if there's a way that QuickBooks can improve this feature, but as long as you know how undeposited funds work, you should be able to avoid this. So let's transition into some of the more advanced income topics. Let's talk about percent complete. So just because your homeowner or their bank has paid you at a certain point during the project doesn't necessarily mean that 100% matches the percentage completion on the project, right? A lot of times by the time you get that draw payment in the bank, you've jumped through all of the bank's hoops and you've filled out all those forms and all of that red tape By the time you actually get those funds in your bank, the project is even more done than what it was at the point when you submitted for that draw schedule payment request. So at the end of every period, it's good to evaluate where you actually are on the percentage of completion. From a tax standpoint, most of you are probably cash basis accounting, so it doesn't play a huge role. But if you want a holistic view of your financials, and especially if you want them to be consistent with US GAAP, you're going to want to make a percentage of completion journal entry either at the end of every month, maybe at the end of every quarter, and at the very least at the end of every year. Just watch out how it messes with your numbers, because if your percentage of completion increases your income, that could be extra tax that you're paying for work that you haven't been paid for yet. So you have to consider this carefully, but you want to track this true percentage of completion or this progress completion somewhere along the way so that you know exactly how much income you're entitled to versus how much you've actually billed for. So then maybe you bill. So in the grand scheme of things, income overall is pretty simple. It's a lot more simple than recording expenses. There are fewer income transactions, but they're usually higher dollar amount. But when they go wrong in undeposited funds, they go really, really wrong. And there's different views on some home builders don't want to see any of their income until the project is 100% complete. I respect that. The true rules from FASB and GAAP basically require that we recognize income during certain milestones or thresholds throughout the project on a progress billing basis. So I think it is a good idea to do a percentage of completion entry every so often. Also, you're going to get really discouraged if you don't recognize any of the income until the end of the project, because you're going to be operating at a negative P&L. If you do get progress payments, you have to record those somewhere because you're not going to reconcile. So it actually gets more complicated to not record any of the income until the project is over, because then you have to park it somewhere on the balance sheet, probably in like a deferred revenue account, which is technically a liability. And even if you were to quit from that home build or the client were to fire you, chances are, knock on wood, depending on your contract, you're probably not going to have to pay that back. So it's not exactly a liability in the deferred revenue sense. It's more of maybe an asset, but it gets really questionable where you can put that on the balance sheet. So that gets into some pretty deep technical accounting. If that is of interest to you, don't hesitate to reach out. Otherwise, happy income, get paid, make money. Have a great day.